Welcome to our Hong Kong Brief program. Today, we're diving into some intriguing developments from around the globe. First up, we're looking at Japan, where Hiroyuki Otsuka, a former Carlyle executive, is shaking up the activist fund scene. His debut fund, Japan Activation Capital, has raised a whopping $1 billion, aiming to boost growth in mid-sized companies without the aggressive tactics often seen in activism. Moving over to China, we see a mixed bag of economic signals. The country's factory activity has expanded for the second straight month, albeit at a slower pace, indicating a cautious stabilization of the world's second-largest economy. Lastly, we're turning our gaze to Hong Kong, which is making significant strides towards becoming a powerhouse of regional prosperity. The city's application to join the Regional Comprehensive Economic Partnership, the world's largest free trade pact, could mark a new chapter in its economic story. Stay tuned for more detailed coverage on these stories. Please continue watching for more in-depth information. In the dynamic landscape of financial and economic activism, Japan is witnessing the rise of a unique player who is redefining the concept of activism in the corporate world. Reuters Breaking Views introduces us to Hiroyuki Otsuka, a former Carlyle executive who has embarked on an innovative journey with his debut fund, Japan Activation Capital. Otsuka has managed to raise a staggering $1 billion from domestic institutions, signaling a new era in Japanese activism. Unlike traditional activist funds that often pursue aggressive tactics to secure major stakes and push for quick returns, Japan Activation Capital takes a different approach. It aims to acquire only minority stakes in mid-sized listed companies that are open to investment. This strategy has attracted commitments from Japanese financial giants such as MUFG Bank, Mizuho Bank, Sumitomo Life, and Meiji Yasuda Life. Otsuka's fund positions itself on the softer end of the activism spectrum, focusing on fostering growth and improving valuation multiples of companies rather than demanding immediate financial gains through measures like share buybacks. Meanwhile, on the global economic front, Nikkei Asia reports an interesting development in China's manufacturing sector. For the second consecutive month, China's factory activity has expanded, albeit at a slower pace in April compared to March. The country's benchmark Purchasing Managers Index, PMI, stood at 50.4 in April, slightly down from 50.8 in March, but still above economists' expectations. This indicates that the world's second-largest economy might be stabilizing after a period of uncertainty. However, the mixed picture of recovery presented by recent economic data has left observers eagerly awaiting potential new policy support that might be announced at an upcoming meeting by the Communist Party's Politburo. This situation underscores the delicate balance China must maintain to ensure sustained economic growth amidst various domestic and international challenges. On another front, the South China Morning Post highlights Hong Kong's strategic move to bolster regional prosperity through economic integration. Hong Kong has officially applied to join the Regional Comprehensive Economic Partnership, RCEP, the world's largest free trade pact, and is expected to become a member within the year. Already having signed free trade agreements with 13 of the 15 RCEP members, Hong Kong's trade with these countries accounted for a whopping 71% of its total merchandise trade in 2022. Joining the RCEP would not only facilitate smoother trade and diversification among member countries but also allow Hong Kong to leverage its expertise in financial and professional services to contribute to the region's economic development. This move is poised to enhance Hong Kong's role as a pivotal force for regional prosperity, further integrating it into the global economic landscape. Each of these developments, from Japan's innovative approach to corporate activism, China's manufacturing sector signs of stabilization, to Hong Kong's strategic move to join the RCEP, reflects the dynamic and interconnected nature of the Asian economic landscape. These stories illustrate how countries and regions are adapting to the challenges and opportunities of the global economy, seeking growth, stability, and integration in innovative and strategic ways. As these narratives unfold, they not only highlight the resilience and adaptability of these economies, but also underscore the importance of collaboration and innovation in driving regional and global prosperity. In the dynamic landscape of China's economy, the nation's prowess in nurturing high-value startups and fostering technological innovation has become increasingly evident. According to a recent report highlighted by the South China Morning Post, China boasts a staggering 369 unicorns, startups valued at over $1 billion each. These companies span various sectors, with a significant emphasis on artificial intelligence, AI, and semiconductor industries, which together account for over a quarter of the total unicorns. The average valuation of these unicorns stands at an impressive $3.8 billion US. Beijing, Shanghai, and Shenzhen have emerged as the leading cities in unicorn creation, reflecting the country's strategic focus on developing its technological and innovation capabilities. This surge in unicorn numbers, however, comes amid a challenging environment for initial public offerings, IPOs, in Hong Kong, Shanghai, and Shenzhen, prompting more companies to delay their listing plans. Parallel to the technological advancements, the social media landscape in China is witnessing a remarkable evolution, particularly with platforms like Xiaohongshu or Little Red Book. As described by Al Jazeera, this platform, often dubbed China's Instagram, has carved out a niche for itself as a vibrant community for young, educated women to share insights and engage in discussions on a wide array of topics. From fashion and work-life balance to more sensitive issues like divorce and domestic violence, Xiaohongshu has become a sanctuary for female empowerment and expression. Despite its polished and feminine aesthetic, the platform navigates the fine line of allowing discussions on semi-taboo topics by focusing on personal experiences, avoiding direct confrontation with systemic societal issues. However, it has faced limitations, such as censorship on discussions about egg freezing, reflecting the government's stance on population growth. Nonetheless, Xiaohongshu's success in monetizing through short-form video, live-stream shopping, and influencer collaborations signifies its robust position in China's social media ecosystem. The platform's profitability and backing from giants like Alibaba and Tencent underscore its growing influence, extending even beyond mainland China to regions with significant Chinese diaspora populations. Amidst these developments in the tech and social media sectors, China is also making strides in enhancing its scientific research capabilities and fostering international collaboration. The South China Morning Post reports on new measures by the National Immigration Administration aimed at facilitating cross-border visits for researchers between mainland China, Hong Kong, and Macau. By introducing multi-entry visas valid for up to 5 years, the policy aims to encourage academic exchange and collaboration, potentially transforming Beijing, Shanghai, and the Greater Bay Area into world-class science and technology hubs. This initiative underscores China's commitment to elevating its innovation ecosystem and promoting interconnectivity among its leading research clusters. Collectively, these developments paint a picture of a nation at the forefront of technological innovation, social media evolution, and scientific research. From nurturing unicorns in AI and semiconductors to empowering women through platforms like Xiaohongshu and facilitating international research collaborations, China is setting the stage for significant advancements across multiple domains. As the country continues to navigate challenges and harness opportunities, its trajectory toward becoming a global leader in technology, innovation, and social empowerment remains a fascinating journey to watch. In the bustling city of Hong Kong, a fascinating trend is unfolding in the real estate market, as reported by the South China Morning Post. Homebuyers, once eager to snap up new properties, are now showing signs of hesitation as developers hike up prices at new launches. A prime example of this is Great Eagle Holdings' On Manton project, which initially sold all 260 units but later released another 150 units at prices roughly 10% higher than the discounted rates of the first batch. This move by developers signals a belief in robust demand, yet analysts are sounding the alarm, warning that the market is oversaturated with stock. This glut of options is empowering buyers to be more discerning, pushing back against price increases and demanding more value for their money. The situation in Hong Kong underscores a broader trend of market dynamics at play, where consumer behavior is directly influenced by the abundance of choices and pricing strategies employed by developers. Meanwhile, in China, a different but equally challenging scenario is unfolding, as detailed by Yahoo US. Cities across the country are grappling with the financial strain of fulfilling home buying subsidies and incentives, which were initially introduced to bolster the property market. The crux of the issue lies in the local government's dwindling ability to lease land to developers, a key revenue stream that has traditionally funded these subsidies. This financial bottleneck has led to a growing chorus of complaints from buyers who were promised support measures that are now in jeopardy. The situation raises serious concerns about the sustainability of these incentives and their potential impact on the market's recovery. At its zenith, the property market was a cornerstone of China's economic activity, accounting for about a quarter of it. The current predicament highlights the intricate balance between government intervention and market forces, and the challenges of maintaining this equilibrium in the face of fiscal constraints. Shifting focus to the world of sports, Yahoo US provides a compelling narrative on the plight of Schalke 04, a German football team teetering on the edge of relegation to the third tier of German football. The club's descent is not just a tale of poor performance on the pitch, but a cautionary story of financial mismanagement that has left the club with debts amounting to €217 million, $260 million, in 2021. The COVID-19 pandemic and the termination of a lucrative sponsorship deal with Russian energy company Gazprom have only compounded the club's woes. This financial turmoil has ignited passionate debates among fans and stakeholders about the future of the club, including calls for its sale to investors and a re-evaluation of the 50+1 rule, which ensures that members retain the majority share. Schalke's predicament is a stark reminder of the fragile nexus between sports, finance, and community, showcasing how financial instability can threaten the very existence of storied institutions. These stories, spanning from the real estate markets of Hong Kong and China to the football fields of Germany, illustrate the multifaceted challenges of navigating financial pressures in vastly different contexts. Whether it's homebuyers pushing back against rising property prices, cities struggling to support their real estate markets, or a beloved football club facing the brink of financial ruin, the underlying theme is the critical importance of sound financial management and the delicate balance of supply and demand. Each narrative, while unique in its setting and characters, offers valuable insights into the broader economic principles that govern our world, highlighting the interconnectedness of our global economy and the ripple effects of financial decisions. In the ever-evolving landscape of international relations and cultural experiences, the stories of TikTok's struggles in the US, the political reverberations of Taiwan's sunflower movement, and the global fascination with Japanese ramen weave a complex tapestry of how technology, politics, and cuisine are interlinked in our global society. Starting with the digital realm, Bloomberg highlights the escalating tensions between the US and China over data security, as exemplified by the US's ban on ByteDance owning TikTok. This decision, rooted in national security concerns, underscores the fear of potential data misuse and the broader implications for US-China trade relations, touching sectors from electric vehicles to healthcare. The move reflects a growing vigilance in the US towards safeguarding data against foreign influence, mirroring China's own stringent data security measures. Caitlin Chin Rothman of the Center for Strategic and International Studies points out that the US is increasingly prioritizing selective data flows based on national security, marking a significant shift in the digital data battleground. This clash over big data signals just the beginning of a broader US-China confrontation, with both nations implementing regulations to restrict access to critical data, from financial indicators to geographic information. On the political front, Nikkei Asia brings our attention to Taiwan, where the legacy of the sunflower movement looms large over the island's political landscape. This movement, which saw a mass protest against a proposed trade deal with China in March 2014, has had lasting implications for Taiwan's governance and its stance towards China. The Democratic Progressive Party, DPP, known for its support for alliances with major democracies over China, is set to begin its third consecutive term with President-elect Lai Ching-te at the helm. Observers anticipate that Lai's inauguration might provoke military posturing from Beijing, reminiscent of the heightened tensions following the movement's success in derailing the trade deal. The sunflower movement not only reshaped Taiwan's domestic politics but also set the stage for the DPP's continued electoral success, reflecting a broader sentiment among Taiwanese citizens wary of China's influence. Transitioning from the digital and political arenas to the culinary world, the South China Morning Post delves into the cultural phenomenon of ramen in Japan. Far from being just a simple bowl of noodles, ramen represents a rich culinary experience that has captivated food enthusiasts both within and beyond Japan's borders. The popularity of ramen has seen a dramatic increase internationally, with retail sales in the US alone surging 72% since 2000. In Japan, the dedication to this dish is evident, with some consumers visiting ramen shops multiple times a week. Tokyo-based Filipino-American Frank Striegel has capitalized on this ramen craze, offering tours that showcase up to 6 different kinds of ramen in a single evening. This culinary experience underscores the global appeal of ramen, transcending its humble origins to become a symbol of Japanese culture and gastronomy. These stories, spanning the realms of technology, politics, and cuisine, illustrate the multifaceted nature of our globalized world. From the digital data wars between the US and China to the enduring impact of Taiwan's sunflower movement and the international allure of Japanese ramen, each narrative offers a glimpse into the complex interplay of cultural, political, and technological forces shaping our contemporary society. In a recent shakeup at 7, the Sydney Morning Herald reports a significant reshuffle within the network's leadership. The controversy began when it was uncovered that 7's Spotlight program had been involved in a scandal, paying for a former Liberal staffer's sex workers and cocaine. This led to the resignation of 7's Director of News and Public Affairs, Craig McPherson, along with several other executives tied to the scandal. Amidst the turmoil, Anthony de Segli, editor-in-chief of West Australian, has been promoted, while Chris Dorr, former editor of The Australian, steps in temporarily to run the papers. Dorr himself had previously left his position amid allegations of misconduct, adding another layer of controversy to the unfolding drama at 7. Meanwhile, on a completely different note, the South China Morning Post highlights a promising development in the construction and real estate sector in Hong Kong. The Department of Building and Real Estate, BRE, at PolyU is gearing up to meet the anticipated boom in the industry, with an annual turnover expected to exceed 300 billion Hong Kong dollars. To prepare for this surge, BRE has introduced the Doctorate in International Real Estate and Construction, DIREC, program, aimed at nurturing future leaders capable of navigating the complexities of the modern real estate and construction sectors. This part-time professional doctorate program is designed for industry professionals with relevant work experience and a master's degree, offering advanced research methods and specialized subjects. It also includes study trips to Europe and the Asia-Pacific region, providing a comprehensive understanding of global practices. Graduates have lauded the program for enhancing their knowledge, skills, and professional networks, positioning them to drive the development of Construction 2.0 through technological innovations. In the digital realm, Yahoo US reports Google's strategic move to bolster its advertising ties with major media companies, including Disney, Warner Bros. Discovery, and Paramount Global. This partnership will see Google integrating with Disney's real-time ad exchange, DRAX, enabling brands to target consumers across Disney's streaming portfolio with precision. Google's DV360 platform has demonstrated significant efficiency, with advertisers experiencing a 120% higher return on ad spend compared to third-party video bought directly, and an 18% higher return than on linear TV. This collaboration marks a significant step forward in streamlining advertising efforts across major streaming platforms, offering advertisers unparalleled access to target audiences with greater accuracy and efficiency. These stories, ranging from corporate controversies and educational advancements to strategic digital partnerships, underscore the dynamic nature of today's media, construction, and advertising landscapes. Each narrative, whether it involves the reshuffling of a network's leadership in the wake of a scandal, the forward-thinking approach of an educational institution preparing leaders for a booming sector, or tech giants forging partnerships to revolutionize advertising, reflects the ongoing evolution and complexities within these industries. Thank you for tuning in. The content above showcases the latest briefing reports and analytical synopses, thoughtfully curated by the 6Do team. These insights stem from a wide array of reputable media outlets, think tanks, government sources, and specialized experts worldwide. We encourage you to explore these sources for a comprehensive perspective. Keep in mind that while the content may not always align with the official standpoint of 6Do Brief, it's not meant to be taken as absolute directives for decision-making. Comprising seasoned media professionals, learned scholars, and accomplished scientists, the 6Do team embodies a trailblazing, fully independent media entity. To customize 6Do Brief to meet your professional needs, you have the option to subscribe to a diverse array of briefings on our website, 6dobrief.com. Regardless of your location, you can conveniently receive 6Do Brief via email.